The US dollar has long been the world's go-to currency, safe, stable, and powerful. For decades, it has been the backbone of international trade, the reserve currency for central banks, and the standard for pricing everything from oil to gold. Its influence stretches far beyond American borders, shaping economies and financial systems across the globe. The dollar's dominance has given the United States unique leverage in global affairs, allowing it to set the rules of the game. But now, major players like China and Russia are openly questioning its dominance, exploring ways to bypass the dollar in global trade. These countries are forging new alliances, signing deals in their own currencies, and building payment systems that don't rely on the US financial network. Their goal? To reduce their vulnerability to American policies, and to gain more control over their own economic destinies. This isn't just economic theory, it's a real challenge to American influence, fueled by years of trade wars and financial sanctions. Every new sanction or tariff has pushed some countries to look for alternatives, accelerating a shift that once seemed unthinkable. The world is watching closely as these tensions play out, with global markets reacting to every move. As the US uses the dollar as a tool of foreign policy, other countries are rethinking their dependence, searching for alternatives. Some are investing in gold, others in digital currencies, and many are strengthening regional partnerships. The question is no longer if the dollar's dominance will be challenged, but how quickly and by whom. The world is starting to wonder, has America overplayed its strongest hand? If the dollar's grip weakens, the consequences could ripple through markets, economies, and even daily life, changing the way nations do business and how people save and invest. The future of global power may hinge on the answer. As countries weigh their options, the world stands at a crossroads, facing a new era where the dollar's supremacy is no longer guaranteed. When people talk about cutting off the dollar, it's easy to imagine someone refusing to accept cash at a local store. But in reality, the concept is much bigger and more complex than that. It's not about everyday transactions or what happens at the checkout counter. Instead, it's about changing the very foundation of how countries and companies do business with each other across borders. The dollar has long been the backbone of global trade, acting as the default currency for settling deals between nations. Most international deals, especially for vital resources like oil, gas, and other commodities, are settled in dollars. This gives the United States enormous influence over the world economy, because controlling the dollar means having a say in who can trade and who can't. But now, countries like China and Russia are pushing back. They're working to trade in their own currencies like the yuan and the ruble, and are building new financial systems that don't rely on US approval or oversight. By doing this, they're protecting themselves from the threat of American sanctions and reducing their exposure to US political decisions. It's a way to gain more independence and control over their own economies. For American businesses, this shift isn't just a distant headline, it means real consequences. Lost access to important markets, supply chains that get tangled or broken, and the rise of new competitors who are eager to fill the gaps left behind. These rivals can quickly establish themselves in places where US companies once dominated. Once countries find new trading partners and build trust, those relationships tend to last. It's not easy to win back lost ground in global trade. By making trade riskier and more complicated, the US has unintentionally opened the door for its rivals to step in and reshape the global marketplace. The world is now moving toward a future where the dollar is just one of many currencies in play, and the rules of global trade are being rewritten before our eyes. The US imposed tariffs to fix what it saw as unfair trade with China, hoping to bring jobs back and shrink the trade deficit. But global supply chains are complex. Tariffs raised costs for American businesses and consumers, not just China. China retaliated, targeting key US exports and escalating the conflict. Instead of a quick win, both sides suffered, and the trade war became a drawn-out economic standoff. The result? More pain than progress, with no easy way out. Uncertainty is poison for financial markets, and the trade war has made it the new normal. Every headline, every tweet, and every policy shift sends shockwaves through Wall Street, leaving traders and investors on edge. The constant back and forth between the world's two largest economies has created a climate where no one feels safe making big bets, and volatility is the only thing you can count on. If the dollar loses its top spot, demand for US assets drops, borrowing costs rise, and the entire financial system feels the strain. Banks become more cautious, investors pull back, and the cost of doing business in America climbs. The ripple effects can be felt from the boardrooms of major corporations to the smallest local banks, as everyone braces for tighter credit and shrinking opportunities. On Main Street, small businesses face higher costs and tough choices: raise prices, cut jobs, or risk going under. For many entrepreneurs, the uncertainty means putting off expansion plans, delaying new hires, or even closing their doors for good. The pressure mounts as suppliers demand more, customers spend less, and the future looks increasingly unpredictable. Everyday Americans pay more for goods, while job growth slows and economic anxiety rises. Families feel the pinch at the grocery store, the gas pump, and when searching for work. The dream of financial security slips further away for many, as wages struggle to keep up with rising costs and opportunities become harder to find. The global chess match between Washington and Beijing has real consequences for families and businesses. It's not just a matter of politics or economics, it's about the daily lives of millions who are caught in the crossfire, forced to adapt to a world that feels less stable and more uncertain with each passing day. The dollar's dominance isn't just a Wall Street issue, it hits home for everyone. From the value of your savings to the price of your next meal, the strength of the dollar shapes the reality of American life. When that foundation is shaken, the impact is felt in every household, in every community, across the nation. The stakes are high and the fallout is widespread. Jobs, businesses, and livelihoods hang in the balance as uncertainty ripples through every corner of the economy. The choices made today will echo for years to come, shaping the future for generations. The world is watching to see what happens next. As the drama unfolds, every nation, every market, and every family waits to see how this high-stakes game will end, and who will pay the price. Is this the end of the dollar's reign? Not overnight, but the cracks are showing. The dollar is still king, but countries are building alternatives and reducing their reliance. China is pushing the yuan, and regional blocs are trading in their own currencies. The future looks more multipolar, with the dollar sharing the stage. America's financial leverage could fade, shifting the global balance of power. This is a wake-up call. Weaponizing the dollar may backfire, pushing the world to move on. The trillion-dollar question: will the dollar remain the world's bedrock, or become a relic of the past?